As far as gold is concerned, it's just been consolidating sideways. It's extraordinary how it's just moved sideways for the last, 2-3 months, consolidating and really providing a platform for the next rise up. Silver is definitely on a tear and it's going to go considerably higher.
You also have the gold EFP rates that just jumped up $4.50 just yesterday. That's another sign of dislocation and demand for physical delivery. So when you got gold and silver and platinum lease rates blowing up, you have the exchange for physical rate blowing up. You have the T+1 going to T+8 blowing, or 8 weeks blowing up, and on and on and on.
Right? That's the whole reason that people are buying gold. The reason they're buying silver. By the way, during the week, silver got above $39 an ounce, right? We're almost at 40. I think we're going to be above 40 shortly. This is the first time since, I think, 2012 that silver got above 39.
In today's news recap, silver price declines to near $390 on firmer U.S. dollar. The silver price attracts some sellers to around $39 during the early European session on Friday. Optimism surrounding the U.S. trade deal allayed trade war concerns and dampened demand for safe haven assets. Investors will closely monitor the developments surrounding trade talks between the United States and its major trade partners. The Wall Street Journal reported on Friday that U.S. President Donald Trump is now pursuing deal-making with China. Trump might shift from a strategy of pressure to negotiation with the goal of securing an economic agreement that will increase U.S. access to Chinese markets, particularly in business and technology. Will DJT chicken out again? Additionally, risk sentiment improved after the Financial Times noted that the EU is close to sealing a deal with Washington, with some similarities to the one signed by Tokyo. The prospect of a new U.S. deal and progress in tariff negotiations could weigh on the safe haven asset like silver. Traders reduced their bets that the U.S. Federal Reserve will deliver a rate cut in the July meeting, expecting less than 2 reductions this year as jobless claims fell for 6 consecutive weeks. Markets largely believe that the Fed will stay on hold when it meets next week, but that it will likely cut rates in September and once more before the end of the year. The cautious stance of the U.S. central bank could underpin the U.S. dollar and weigh on the USD-denominated commodity price as it makes silver more expensive for buyers using other currencies. Now we'll show you the best clips of the latest interview. Don't forget to like, subscribe, and turn on notifications so you do not miss out our daily recaps. And check goldsilverstacks.com to get your Stacker's Handbook, the ultimate guide to stack gold and silver, packed with strategies to trade the gold-silver ratio and get more ounces and build wealth over time, so you don't have to rely on market commentators to make your investment decisions. Enjoy the episode.
So I would expect to see gold drift off a little bit, but I mean, we're talking, 1-2% sort of thing. I mean, this is not meaningful in the scheme of things. The other thing I would throw in is that this underpricing of metals as a whole is now leading to indigestion, if you like, in the papers markets. If you look at the best performing commodities this year so far, platinum, palladium, copper, silver, gold. It is extraordinary. And this is reflecting just how undervalued metals as a whole, precious or otherwise, have become. So anyone who thinks that there is going to be a decent reaction in gold and they're going to be able to get into it and all the rest of it, I think they're going to miss it, I'm afraid. And that's the way it is. It's very underowned. I mean, if you look at the other way of looking at this is this is gold, admittedly, but it's estimated that total portfolio assets around the world, global assets, are in the region of I think the 2023 figure was $270 trillion. If you look just at the ETFs, that represents less than 0.2% of that. I'm talking about global ETFs. Now, the reason I would say ETFs is that in most of the world, in terms of portfolios, you have got investment regulation, and gold is not a regulated investment. So it's actually quite difficult for an investment manager to put raw gold, physical gold, into a portfolio, because he's got to argue the toss with his compliance officer. And, do you want to do that? No, you don't. So what you do is you buy a gold substitute. That is why I think that the gold substitute in the form of ETFs, which is a regulated investment, is a fair indication of the level of gold interest in portfolios. Now, obviously, there is an element of wealth, and a fairly large element of wealth, like say a larger element of wealth than ETFs, privately held as private wealth, not part of, if you like, the sort of regulated investment scene. So it's not recorded, if you like, in ETFs. But nonetheless, that's very concentrated in Asian hands. We know that. But when it comes to US, when it comes to UK, when it comes to EU, and when it comes to, our friends in Australia and Japan and so on and so forth, gold is very underowned. So if you get some sort of crisis and a flight into the dollar, which is what happened in 2008-9, people haven't got the gold to sell. They'll sell something else. So this is why I feel the downside in gold is very limited. And, of course, the other thing is, and this is desperately important, it's not so much the gold price has been rising, but the dollar has been falling. And so much so that we've even seen this in the trade-weighted index. So, in short, there is a lot of catching up to do. And I think it's all part and parcel of the swan song, if you like, of fiat currencies.
They're going to internationalize the yuan. And so Trump never said that China couldn't do this. I believe Xi Jinping said, screw it, we'll do it then. And what they're doing is, in essence, the beta test. And the beautiful part about it is that it's not a BRICS common currency. It's China doing it. But if you're building the rails to this entire system using mBridge technology, how hard would it be for them to, once it's operational with the yuan, for gold, how about they then just bang, switch the BRICS unit token onto this set of proven rails? That's what they're doing. They're beta testing it, and they're keeping Trump away from getting angry about the BRICS unifying. And I thought about one other thing too, and that is, why would the U.S. be talking about gold revaluation? And why would Judy Shelton be talking about 50-year treasuries pegged by gold? Why does she say that he'll issue them next July 4th? 2026, in conversations that they've had together? Why? Well, the only answer I can think of is that they're going to sacrifice the dollar. The United States will sacrifice the dollar, but what is more important than the dollar is the Treasury. The Treasury is far more important than the dollar. The Treasury is what finances our spending and our indebtedness. So if the world knows that we are going to continue to inflate the dollar away, holding the dollar is crazy. But how do we get them to hold the Treasury without, or purchase the Treasury without letting rates go parabolic to compensate for that inflation? See, if you're going to buy the Treasury in an inflated currency, you demand a higher rate. Well, what if you offer gold that is deliverable upon maturity, which takes the place of the interest rate? In other words, this is how you dramatically lower your borrowing costs, because gold, which has doubled the performance of the 10-year Treasury, look at this year, it's up 38% and the dollar's down 10%. So if you had bought a 10-year Treasury at 4.5%, you're up 2.25% so far this year, but the dollar's down 10. Gold's up almost 40. Look at last year, gold was up 40, the 10-year Treasury was up 4. So in other words, gold represents the inflation hedge. Gold would represent the interest on the bond. That's why Judy can say maybe even a zero coupon bond redeemable in gold upon maturity. This is why they were, if in my mind, they're reshoring the gold. This is why George Gammon is talking about the potential of gold being revalued just the way that we did. It is in the Treasury manual. He showed it that they can do it. We've said that. All they need to do is make it so. They just need to do it, and doesn't even need congressional approval, and it's done. And the Treasury then issues gold certificates to the Federal Reserve. It doesn't give them a call on the physical gold. It gives them a call on the fiat value of it. So in other words, the Fed holds the gold on behalf of the Treasury. They print money created out of thin air, give it to the Treasury. The Treasury gives them the certificates. They own the money for it. But now the act of doing that creates inflation and devalues the dollar. That's exactly what Trump would want in order to mitigate the debt by having a lower dollar and lots of inflation. It's a gimmick. It's an accounting gimmick. But you have a lower dollar, you have lots of inflation, and now pegging gold deliverable on it gives you lower borrowing costs. And if you start with the 50-year version of it, you have a lot of runway to let the price of gold go way higher between now and 50 years.
In today's news recap, gold slides, but bull run intact amid macro supports. Gold prices have recently entered a corrective phase, triggering market discussions. This short-term pullback has raised concerns among some investors about gold's future trajectory. However, macroeconomic conditions and historical patterns suggest these adjustments are unlikely to undermine gold's long-term bullish foundation and may instead create conditions for the next significant rally. Bolstered by optimism over trade agreement prospects, gold extended losses for a second consecutive session on Thursday. Growing expectations for easing trade tensions prompted capital rotation toward risk assets, pressuring precious metals. Gold futures on the COMEX settled at $3,373.50 per ounce. The current market highlights the delicate balance between geopolitical developments and precious metals valuations, with trade policy remaining a key near-term driver of investor sentiment. Preliminary data indicates strong H1 demand supported prices. The World Gold Council reported increased activity in over-the-counter markets, exchanges, and gold ETFs, with average daily volume reaching a record $329 billion. Global gold fund holdings rose by 397.1 tons. Approximately $38 billion. The Council's gold return attribution model identified low opportunity costs, price momentum, and risk environment as key H1 drivers, collectively contributing about 16% to returns. Gold's strength is further evidenced by the Canadian equity market outperforming U.S. stocks. As of Wednesday afternoon, the S&P/TSX Composite Index gained about 11% year to date versus the S&P 500's 8% rise. The gold sector was the primary contributor, with gold prices up 30% year to date. Analysts highlight structural supports underpinning gold's strength, noting that government deficits, inflation concerns, and trade uncertainty remain positive factors, according to Brian McCaney of Raymond James. Now we'll show you the best clips of the latest interview, but first, smash the subscribe button, turn on notifications, and check our new Numismatics handbook. Most stackers want to get active, but swapping their metals for dollars isn't an option. There's plenty of opportunities in the overlooked numismatics world. Mastering U.S. coins, key dates, and errors pays off by multiplying your ounces and capitalizing where others aren't paying attention.
That's why we want to buy Bitcoin, because they're all on board now, the Bitcoin train, right? So you got to hop on board or you're going to have fun staying poor. So we'll see if this, again, I keep saying maybe we've topped out. Maybe this is a sign of a blow off top, the end of this bubble when you've got so much hype. Bitcoin got to 123,000, but at the end of the day, that's not really much higher than it was earlier in the year, given all this nonsense. And of course, they're trying to tout these stable coins as the salvation of the dollar, right? That's the biggest BS. To say that, these stable coins are going to save the dollar because they're denominated in dollars. Well, so what? I mean, there's nothing that stops anybody anywhere in the world from issuing a stable coin that's denominated or backed by euros or Swiss francs or yen or Australian dollars or any of these currencies. I mean, so what's so special about a dollar stable coin? Absolutely nothing. People are saying that, this is going to help create demand for treasuries, because the issuers of stable coins are going to buy treasuries. Sure, they're going to buy treasuries, but they're, That's not going to be enough to offset all the treasuries that China and Japan and Saudi Arabia and everybody else are no longer buying, let alone selling. And again, the stability of a dollar stablecoin rests on the stability of the dollar. So at the end of the day, if people are losing confidence in the dollar, they're not going to buy dollar stablecoins, right? They're going to be avoiding them or getting out of them, right? That's the whole reason that people are buying gold. The reason they're buying silver. By the way, during the week, silver got above $39 an ounce, right? We're almost at 40. I think we're going to be above 40 shortly. This is the first time since, I think, 2012 that silver got above 39. It pulled back slightly. I mean, I think it closed the week, around 38 and a half, yet silver stocks are still maybe more than 10% below their peak. That's how much they pulled back on a tiny 1.5% correction in the price of silver. You got a dumping of silver stocks, which had made new 52-week highs as silver went up. And then, of course, it's very weak hands in the gold and silver mining stocks. People still don't have the conviction of this trade. It's climbing a wall of worry, and there's tremendous amount of worry on this wall, which is why I think these stocks are still great buys. Platinum almost hit 1,500. You remember, on my podcast, I specifically told people a couple months ago, when platinum was still below 1,000, I said, you got to buy it. Buy platinum. I said, gold is 3 times the price of platinum. Platinum's risen 50%. That was a great trade. Now, I think platinum may pull back a little bit more. I still like the silver trade better because I think that's going to explode. And I think once it goes to 40, the move to 50 can be very quick. But in the meantime, gold has been going sideways. It's like 3,350, 3,400. I mean, it's been trending sideways because the NASDAQ has been making new highs. It made a new high last week. The S&P made new all-time highs. In fact, on Friday, the S&P and the NASDAQ made new record highs. Now, they didn't close there. They actually closed slightly negative on the day, but they still printed new highs. That's why the interest in gold has temporarily taken a back seat. And that's really what's driving crypto. It's the appetite for risk assets. Gold has been going sideways, and in that environment, Bitcoin has risen along with the NASDAQ and all this extra hype surrounded by Crypto Week. But getting back to this stablecoin. So the stable.
What do you think of Alasdair's take? Is he spot on? Will the BRICS nations' master plan come to fruition, or is all this nothing more than conspiracy theories? Post in the comment section down below your honest opinion and share with the stackers if you're accumulating more gold and silver on this run-up, or if on the other side you're taking profits. Thanks for watching. Now check this video right here because it's a perfect fit for you, and I'll see you on the other side.